Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Uh, Here's kind of an interesting thing to point out. And if you if you have experience trading options, maybe this is something that you are totally familiar with. If you don't have experience trading options, kind of an interesting thing to note. High implied volatility, right? Like I'm sure most of you know what that is, and so I'm not going to get into that too much what the actual implied volatility means. But suffice it to say that implied volatility, it can kind of work both ways, right? Like, so we know when implied volatility is high, our option pricing is high, expectations for a big move are high, right? When implied volatility contracts, option pricing tends to contract, the expectations for a bigger move tend to contract, and if you're long premium and implied volatility is contracting, that's usually a bad thing, right? You tend to lose money if you're long calls and the implied volatility is contracting, right? Um, What's interesting about implied volatility and expensive options is that they can kind of work both ways, though, right? So SBE, this was, just a kind of like a momentum name looking for a breakout. Its peer Blink, which is wireless EV wireless charging, was breaking out. So I was looking for switchback to go and take a run and put in a new high, right? So um, because the options were so expensive out through February, what we did was we did the closer to the money call spreads, right? So when the stock broke out and ripped into the high 40s, it actually sent the call spread well into the money. But because premiums were so high, implied volatility was so high, the option spreads really didn't gain a whole lot, or at least not enough to really warrant cutting risk and rolling up, right? And then when it reversed sharply to the downside, obviously the options rolled over, but because implied volatility remained so high, because the options still have over a month to expiration, so at that point it was about 6 weeks till expiration. The implied volatility remained high and time value remained high, and even though the stock dropped almost 30% off its high, the options really didn't take as much of a hit as you would have expected because the implied volatility was so high, right? Like the premiums were so high that they kind of remained firm even though the stock had a major pullback, right? So the implied volatility can work both ways. And what's most important to remember is that you when you're putting on options, you really want to take into account what's the implied volatility, right? What are you paying? And also the time to expiration, because that's really going to lead to like a significant impact for those options, right? So like had switchback been short-term options, then a 30% pullback is going to take like a material toll, right? Then I'm going to need to keep a much tighter stop. But because there was 5 6 weeks until expiration, I was okay letting it come back a little bit further because the option pricing really didn't get hit that hard, right? Moving forward, I'm probably going to want to keep a tighter stop just in general because if the stock starts to lose like 34, 35, it's really going to start to deteriorate, right? So it might use a technical stop, but what was nice about the pullback, it was that the option pricing remained pretty firm and allowed us to stick with it, all right? So this is kind of what I meant when I said they can work both ways, right? So they can kind of work against you sometimes when they're going up, but they can also help you out a little bit when they're going down because of those high option premiums. All right. So a little just option basics there. So if you like this video and you're looking for more information about just basic option information or basic option education, please follow up with the link in the description of the video for more information on options and play. I hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.